Ladies and gentlemen, a thriving city doesn't emerge overnight. It grows because someone continuously creates new connections, opens new opportunities, and ensures that every part of the ecosystem works together. A chief business officer plays a similar role. While others focus on individual functions, the CBO focuses on expanding reach, strengthening partnerships, and building the foundation for long-term growth. Our next speaker has exemplified these qualities through her career. As the Chief Business Officer of Axis Mutual Fund, Ms. Vandana Trivedi has been instrumental in driving business transformation, expanding investor reach, and fostering stronger distribution partnerships. Please join me in welcoming Ms. Vandana Trivedi as she shares her thoughts on Redefine, Innovate, Soar, and Excel. Let's have a big round of applause for her.
Cut off from the audience.
Actually, camera will come only in the center.
So I should take the hand mic?
Yes. Hand mic. Yeah, to honor Ms. Vandana, I would request Mr. Srikantan to give a bouquet, please. Center.
अंदर सोड करना अंदर जोड़ करना इपर जोड़ अंदर सोड करना अंदर जोड़ करना इपर जोड़
Yes. Hi, good afternoon, everyone. I was going to ask you how many people know Tamil here, but I just heard Dr. Sandhya quote Thiruvalluvar, so I think I'll jump into the little Tamil that I know. For me, in the stage la unga munnadi ninit pesறது is like a homecoming. Wait, I'll finish. I was practicing this more than my deck. So 26 வருஷத்துக்கு முன்னாடி நான் என்னோட professional career சென்னையில இருந்து ஸ்டார்ட் பண்ணேன். I started my work with Cholamandalam Mutual Fund, and this was in May 2000. I think exactly 26 years, and I was hired to lead retail sales. So that's my start. This city is my start. Some of the people that I love the most live in this city, which is Inga Amma Appa, my sisters. I have 2 younger sisters, so that's just a little personal snippet. I know I have a time constraint, and I'll try and honor that. So I think I was just looking up the agenda. I probably am the only speaker who has been given the entire mandate, which is RISE. I don't know why this favor on me, or you just kind of wanted to pin me down with a lot of content to be loaded in 20 minutes. But I'm going to try and do that. Sir was asking in your definition, what is Redefine, what is Innovate, what is Soar, what is Excel. I think we will have a definition at the end of these 20 minutes, which I hope you will be able to relate to. My approach to today's theme is to So my favorite quote that I keep talking to my team also is that you can only grow that tall because you have growth only for a few years in your life. But if you want to grow taller, if you want to achieve more, you have to actually stand on the shoulders of giants and then look out. So with that spirit in mind, I thought to talk about this theme, why not look at what some of the most legendary investment legends have adopted. You would have heard of almost all of them, and I'm not going to talk about stories that we have heard about or their practices that we are all familiar with. What I thought was I'll just pick up one little story from each of these investors, and which relates to our theme here. And then see, as an advisor, as an MFD, obviously our landscape is big. What is that one part of your business where you can actually, build on some of these themes? So with that, I want to go ahead. Yeah, so obviously, what is RISE? RISE is Redefine. And to talk about redefining, I'm going to use Mr. Buffett's example. And I'll just talk about what was that one thing that he did which basically redefined how investing needs to be looked at. If there is anybody in the investing world who actually taught people like you, me, and so many people before us and so many people after us as to how investment should be looked at, that was him. And the example that I'll share with you in a bit will make it clear as to how he managed to redefine investment itself. For Innovate, I'm taking the example of the father of index investing, the founder of Vanguard, who's John Bogle. He's also called as Jack Bogle by some people. He really taught us that to innovate, you really do not have to work very hard or be very creative to think tangentially. Many a times, innovation is found in the simplest of things around us. Soar, of course, all of us want to soar. I think that was the easiest for me to do. Soar is basically, flying above, like I heard from you, flying above what is possible, I think is Soar. And for Soar, actually, I want to, obviously you can do everything, but I'm just identifying 3 growth pockets that may be relevant to us. What is the example that I want to set forth for Soar, the big bull of the Indian markets, Mr. Rakesh Jhunjhunwala, the late Mr. Rakesh Jhunjhunwala. Lastly, I hope all of you have heard of, I was just thinking maybe this is one person who may not be as familiar, but heard of and learnt from Howard Marks. I think he is the person who has actually exemplified Excel, if anyone has ever done that. So that's the broad construct of what you will see. Okay. Yes, I don't need to introduce Buffett, I think, in the interest of time. What is that one story of Buffett that I want to talk about? So the year was 1988. And 1988 was a very, actually continues to be a monumental year. Not 1988, but a few months before the start of 1988, which is October 1987. October 1987, I don't remember the date, I think 19th or whatever. It was a Monday, it was called as a Black Monday. It was a Black Monday because markets worldwide started tanking, beginning with Asia, Europe, and then finally into the US. That day, the Dow fell about 22%. Can you all take a guess, and it was the highest fall ever, and that record is still unbroken. Can you all take a guess by what percentage Dow would have fallen, say, in the most recent memory of a fall that we have had, which is COVID? Any number? 10%? Sorry, sir? Absolutely right. It was about 12%. And this day, the market, in October 87, the market fell by about 22% The highest other day the market fell was in 1914 during the First World War, where the markets fell by about, the US markets fell by about roughly 20%. But the point is, in 1988, there was a huge market fall. The sentiment was very poor. Anyone worth anything in the investment world wanted to do nothing with equities. Buffett said, listen, there is this company that I like, and I want to buy stake in this company, which is Coca-Cola. And stake, what kind of stake did he buy? In 2 years, between 1988 and 1990, he ended up owning 7% stake in Coca-Cola. By the way, Berkshire still holds that stake. He ended up owning 7% stake in Coca-Cola, and he spent roughly about $1 billion to effect that sale. That buy. Now, why was that purchase very important? That purchase was very important because that purchase and its compounding impact is actually been lasting since 1988 till now. It continues. Now, what is that impact? Obviously, for Buffett, what were the personal motivations that drove him to buy Coca-Cola? He believed that Coca-Cola is actually a religion, a creed. It's not a product. He believed that Coke is something which is bought and drunk in billions across countries on a daily basis. And all of this came after 1985, which was 2 years or 3 years before he bought Coca-Cola, where actually Coke completely goofed up their business strategy. They introduced a new kind of flavor into Coke, which was called as a new Coke, there was a massive outrage against the company, and the company actually withdrew the new Coke flavor. Okay. Now any other, appraiser or an investor would have thought the company has just lost it. The management has just lost it. They do not have a strategy, or it's bad decision making, it's bad planning. But for Buffett, what he saw was something very different. To him, the kind of outrage that they encountered after Coke actually had to withdraw the new flavor proved to him that Coke had a brand call, or Coke had a kind of a pull which will never ever be shaken. Right? That he actually viewed the entire outrage as a positive for the kind of passion that people felt for Coke. He held on to that stock. He holds on to that stock. The important thing is, can you guys take a guess? Or maybe I put it in the deck. Okay, sorry. The dividend yield of that stock is 65%. His average cost is roughly $4.5. The dividend that he's getting is $2+ kind of dollars. And, can you imagine dividend yield for a stock at 65%? So what did Buffett teach us? Or what is a message that one could take from this? All great numbers there, which we celebrate every month. AMCs are more to be blamed for these celebrations than you are. We are very excited when we see these numbers. The AUM at about 82 lakh crores, there is 30 times growth in the number of folios, 63 months of continuous positive equity inflows into the industry. All of that is great. But yes, sir, great. But however, 1 in 5 SIPs just falls off the investment pipeline. People just stop it. More importantly, the last 2 to 3 months, the thing of concern to us is that the stoppage ratio is a little over 100%, which means that probably more people are stopping than people are buying into SIPs. Now, why should someone, Mr. Mantri just said that, listen, do an SIP because people do not know how to calculate XIRR, and therefore it sticks, which is true partly. But then, I don't think people should continue with SIPs for either XIRRs or for market moves. Basically, the SIPs should not seek permission from the market to sustain and to grow. Ideally, SIPs should probably be mapped to goals. And therefore, when an investor is looking or relooking his or her SIP because the market has not done anything for the last 2 years or 3 years or 5 years, he or she is actually seeing, has he actually met his goal to worry about that? It comes from an intrinsic behavior nudge, which as advisors maybe you're capable of doing, and more of that, and some of, what I'll say more could actually add to this. But a lot of how an investor looks at his or her SIP changes radically when it is actually mapped to a goal rather than mapped to fund performances. And then, for Innovate, I thought, I thought hard, because in our industry, there is no shortage of innovation, in my opinion. Every week at Access AMC, we get together every Tuesday. We have something called as a product meeting, and we're just thinking, how can we do something different in the product space? Of course, the regulator has been exceedingly foresighted to actually box us into scheme categories, which is the best thing that a regulator could have done. They've tried their best to simplify. And therefore, when I was thinking about that, I said, listen, simplification is innovation, and who better than... So he has this book called Stay the Course. I really love that book. I've read it twice over. I think this was a man who was so ahead of time. He was ahead of time and stuck to his conviction despite the entire world actually ridiculing him. He founded Vanguard in 1974. He had been working on the principles of index investing for at least 2 decades before that. So since mid-1950s, in fact, he had a paper, academic paper published in the Princeton journal to actually propagate the merit of index investing. Basically, his thesis was that all active managers together constitute the market, and if, for example, to put it simply, if all of us were the market and trading with each other, End of the day, some of us gain at the expense of some others, right? That's how the market works. So for the gains that this portion makes, this portion compensates by actually taking in losses. So his thesis was, it's difficult for active managers to beat the larger markets or to meet the average market returns. Now, this was the time, especially in America, where active management was thriving. Fund managers were treated like gods. Fund management fees was a great revenue stream for asset management companies. And you had the likes of, say, Fidelity and Merrill Lynch, etc., who were doing exceedingly well in the active management. They were basically worshipped almost. Now, in this kind of an environment, Bogle launched his index funds. The market called it Bogle's folly. People like the CEO of Fidelity said that it's very un-American. And people said, how do you even think investors are going to be okay with just market returns? Wouldn't investors want to chase more than market returns? Cut to now, this is the largest index house. Of course, BlackRock is big as well, but they bought iShares. This is the already, okay, all right. So the story for us from the passive space is that, you have about, you've seen a significant growth in the index funds space. Importantly, the number of folios growth is something which should not be taken away. And when you're looking at innovation, possibly the answer lies in simplicity more than trying to complicate it for your investors. I have to run through now. On Soar, basically, I'll take the example of Rakesh Jhunjhunwala's Titan. Jhunjhunwala bought Titan in 2002. 2002 was a period when Indian markets were dull. Nobody spoke about Viksit Bharat ya Mera Bharat Mahan. It was Jhunjhunwala who spoke in 2002 that India is a great market and India is an aspirational market, and tomorrow if the Indian citizen were to earn more, as an aspiration, what would he buy? He would buy more of watches and more of jewelry, and therefore he went ahead and bought Titan. Out of 50,000 crores of his net worth, 11,000 crores is Titan. I think his wife still holds the stock. Now, the lesson for us is, to soar, really look at three growth areas. In my opinion, there is a pin code effect, which is the B30, and there are some numbers on the screen as to how B30 is actually growing faster than T30. Not just in AUM gross sales terms, but also in terms of the number of new investors that are joining the club of the mutual fund industry space. Look at women investors. I'm not sure if we have really capitalized on women as long-term and goal-oriented capital allocators. There is research to prove that women are more long-term and more goal-oriented in their investment approach than men are. So that's a clear pull. Lastly, I think that, there is again research to say that whenever wealth transfers from one generation to the other, the financial advisor to that person loses in 70% of the cases because you do not have a relationship with the second or the third generation. So that's a great spot to be occupying to grow the business. Now I come to the last one, Excel. But I think, in my opinion, the most important, Howard Marks runs, or is a co-chairman of Oaktree Capital. He started his career as a fixed income manager or trader. And he has created respect for himself by writing memos. Memos is basically thought pieces. It's not market updates. It's not market outlook. It's not to say the week that was, the stocks did well. It was thought pieces on investment wisdom, how to look at risk, how to manage investors' emotions, and how he redefined risk as risk is not volatility, risk is actually permanent loss of capital. So basically, he was able to, nudge people, including people like Warren Buffett, who say that the moment Howard Marks' memo comes, that's the first thing we read. There is a return gap in your investors' portfolios. Whatever we say as returns that the scheme has given is not what your investors have earned. They actually have earned 4 to 5% lesser than what AMCs have delivered. To kind of cover that return gap, what would be useful is if you are able to create a kind of a communication with your investors, and you could possibly take that as an actionable, that to do that at least once a month or once a quarter, you will communicate with your investors, not about market outlook, but about their goals, but about what their investment principles should be, or what is the charter that they should have towards their financial goals. I think it's a great way to nudge behavior. Ultimately, behavior will take the course that you want your investors to do. That's pretty much my last slide. I'll not go through this because I just had one. Quickly, you know the names by now, I think. I'll not go through this question. Redefine was Buffett. Innovate was John Bogle. Yeah, Soar was, do I have time to do question answer? Junjunwala, and Excel was Howard Marks. But can I please have a raise of hands? This is the last 10 seconds. Who all want to redefine? 10 seconds. Innovate. Soar. Excel, everyone. So please put your names here. Thank you very much for the time. Sorry about extending. Thank you.
Thank you, ma'am, for the nice speech. Please be on the stage. So let me call upon an ex-colleague of Madam, Mr. Suresh from Ram Advisory. Give him a momento.